So I would put 5% or $5,000 into something a bit more growthy, a little bit more niche. And for me, you can always go with China Tech, right? China Tech is high growth. There is a lot of potential there. It has done well, but we all know that China and the US have the biggest tech markets in terms of the biggest tech giants out there. And one of the best ways to get exposure to the China tech market is through the Hang Seng Tech Index. And the best way to get exposure to that is actually through the Singapore listed Lion OCBC Hang Seng Tech Index ETF, which has the ticker HST. Okay, so since there was an allocation to something a bit more high growth and a bit more risky in terms of the Hang Seng Tech ETF, I want to have something else that's going to offset that and balance that risk out. And so you want to think about something a bit more defensive in nature. So for me, I'm going to allocate the remaining 5% or $5,000 to gold. And what is the best way to get access to gold? Well, a lot of people talk about the gold shares ETF or GLD, and they also talk about the gold shares ETF listed on the Singapore exchange, which is GSD in Singapore dollars. But for me, it's a relatively expensive way to get exposure to gold. So one of the best ways is to actually just buy a London listed ETF, a rather big one, which is done by iShares, and it's the iShares Physical Gold ETC. And this actually has a ticker of IGLN, and this is the US dollar share class. In terms of how it pairs up or compares rather to the GLD ETF, the GLD charges 0.40% per annum in terms of its total expense ratio, and the iShares Physical Gold ETC listed in London charges just 0.12% per annum. So it is much, much cheaper.